Good morning. Thank you very much for joining us today in this webinar designed by the Blue Economy Cluster Builder Project. So our project today, the core objective of this webinar is to support and to discuss support SMEs by discussing some investment opportunities for SMEs that want to operate and grow in the blue economy. So the Blue Economy Cluster Builder Project was designed to accelerate climate actions and energy transitions in Scotland by engaging SMEs with innovation and with some broader stakeholder engagement structure. So we are here today inviting Richard, Knox, Max Karkas, and Martin Branching to discuss some opportunities for investment in the blue economy. Just to get started, we want to go through some housekeeping bullet points for today. Can you move to the next slides? Yeah. So your microphone today is automatically muted, so we will have the opportunities to ask some questions through our Q&A function. Your camera is also disabled during this webinar. To try to keep our connection more stable today, try to turn off any non-essential applications. And this webinar is being recorded, and we will share the link for people that couldn't attend today through our YouTube channel. So today our agenda is, this project is implemented by Aquaterra. So I'm Julia. I've been working this project since 2020. And this webinar will go through Max Karkas. He has been supporting us with some economic assessment about the blue economy. Richard will share some of his experiences with investment in blue economy and for the development of new technologies. Martin from Scottish Enterprise is here to share some products for SMEs that investment products for SMEs to grow. And after the session, we'll have some Q&A time for you guys that want to ask some questions for the panelists. So next slide, please. Yeah, so Max.
Good stuff. Right. Okay. Thank you very much. I can't see who's on the call at the moment, so hopefully there's a number of you out there, and hopefully you'll find this interesting. I would encourage you to, as Julia said, use the chat function. It'd be quite good to try and make this as interactive as possible. And let me just see if I can share my slides. Just give me a second. I will just, oops. Hang on. Oh, no, that's not working. Give me a second. Just do that. And do that. Technology never works when you want it to. There we go. Share screen and desktop one. Share. And hopefully now, through the magic of everything, oops, I can share. Right, is that working? Have I got the slides there?
Yeah, thank you, Max.
Sorry for that delay. Right, okay, so yeah, so what I'm would like to talk about is investment in the blue economy, challenges and opportunities for SMEs in private investment. And as Julia said, this is part of the Blue Economy Cluster Builder. So great to be here. So first of all, I suppose one question is what is the blue economy? And there are various definitions of what the blue economy covers. It's become quite a buzzword for different governments and institutions, ranging from the European Commission, that define it as all economic activities related to oceans, seas and coasts, covers a wide range of interlinked and established and emerging sectors. The World Bank, the theme of sort of sustainable use of ocean resources for economic growth, improved livelihoods and jobs and ocean ecosystem health. The Commonwealth, an emerging concept which encourages better stewardship of our ocean or blue resources. The OECD, the ocean economy encompasses ocean-based industries such as shipping, fishing, offshore wind, marine biotechnology, but also the natural assets and ecosystem services that the ocean provides: fish, shipping lanes, CO2 absorption, etc. And various other definitions here. Most recently, actually, Canada, Department of Fisheries and Oceans, they've just created a blue economy strategy. So I guess it is very much a theme, and it is something that is quite difficult to pin down precisely, because it covers all of these different sectors, different themes. But I think at the heart of it, you're looking at ocean innovation. How can we use innovation, new technologies, latest scientific findings and best practices to build prosperity, but also to conserve our ocean resources, and to do so in a sustainable manner. And also, of course, geographically, we're looking at the seas, but also the coastal regions that are close to those seas. And that graphic gives you a little bit of a picture of that. So that's sort of a kind of overview of what the blue economy is. If you break it down into different sectors here, this graphic here on the right is from the European Commission. And quite a useful sort of grouping of different sectors here, from aquaculture to fisheries and fish processing, to shipping, shipbuilding, repair, coastal tourism, ports and warehouses, marine extraction of oil and gas, maritime technology, and then sort of more emerging areas, perhaps of, well, it's perhaps wrong to say emerging, but growing very recently, areas such as offshore wind energy, desalination, coastal environmental protection, ocean energy, and blue bioeconomy sort of sectors. And there's a range of sort of things that enable this, whether it's common skills, shared infrastructure, sustainable use of the sea, environmental protection, marine spatial planning, maritime security, and marine data. And actually, many of the skills of people in these sectors can be applied into different sectors. There's a lot of potential for transferable skills here, understanding the marine environment and how things operate in that, understanding the sort of planning and spatial requirements, understanding the ecology, are all kind of cross themes that cover all of these different sectors. But to create a blue economy, all of these sectors need to decarbonize, and that is our big challenge at the moment, which is exciting because the challenge is also an opportunity. Net zero is the overarching challenge, and this little graphic here shows our sort of energy use here in the UK since 1970, and how various different sectors have either increased or decreased in energy use here. Now, I like to talk about energy in terms of terawatt hours. You can see on the graph here, on the left-hand scale, it's got millions of tons of oil equivalent. The total here is 1,600 terawatt hours. So just bear that number in mind. And if you look at how that's broken down by different energy uses at the moment, this graph here shows that 1,600 terawatt hours. They're broken down by these different sectors here of other, electricity, natural gas, and petroleum. And so how are we going to decarbonize these sectors? Well, if you look at electricity, for example, we currently have a bit more than I'm indicating here, but roughly about a third of our electricity coming from renewables at the moment, about 100 terawatt hours. That orange block there is 300 terawatt hours. So decarbonizing electricity is still quite a big challenge, although it's one of the areas we've made the most progress on so far. If you look at natural gas, well, we use a fair chunk for sort of industrial processes that aren't related to the main use of gas, of electricity and heating. And if you look at petroleum, we use obviously a lot of oil related products in industry, which is not so much energy related, but in actually making products. Then there's a chunk used for air transport, which is an interesting challenge in its own right, but we'll sort of move on from that at the moment. And if we go back to electricity here, what I've suggested here is that maybe we could meet a block of that remaining orange block there by energy efficiency. That's a big if, a big maybe. That leaves another 100 terawatt hours that has to come from somewhere that's zero carbon in order to decarbonize electricity. And maybe it's 200 in order to be at the same level we have been out. And we have been making progress in energy efficiency. Energy use has been declining in the UK in terms of electricity. Well, that may be in part due to industrialization elsewhere. If we look at heating, well, obviously we could do better. We could do much better from insulation, but that still leaves a big gap there, that blue gap. And if we were to electrify things, then that's another 100 terawatt hours. And potentially, if that was all heat pumps, then given that heat pumps give you 3 times the heat output per kilowatt hour of electricity, you could do it there with 2 blocks. So you can see now where I'm going with this. There's 2 blocks there of 200 terawatt hours that are required, and maybe hydrogen is also an option here. And then if we look at transport, I've suggested here another 100 terawatt hours of energy required from electrification, another 100, and then benefits from electrifying transport. Because if you electrify transport, you have much better efficiency, and so you can have 2 to 3 times less energy per kilometer. So basically, to cut a long story short, we need perhaps 4 to 5 times what we've already achieved in renewables in order to meet the 2050 target. And whilst we've got some big ambitions in offshore wind, there's still an awful lot of way to go, and there are still challenges in terms of how you meet demand in the middle of winter when you may have lulls in wind and not much sun. So it's all to play for, and this affects all of the sectors that we're looking at, which is why it's exciting. So the opportunities, if you look at different sectors here, in energy, I've talked a little bit about offshore wind. We've had a big growth in offshore wind, fixed offshore wind. The new kid on the block is floating offshore wind, and that allows resources that are further offshore in deeper water to be exploited. Still comes with some cost challenges and logistical challenges, but there are projects that are up and running and generating as we speak at the moment. Floating solar is another interesting area. Solar has become very inexpensive as an energy generating technology, and obviously at sea there's a lot of space, but equally a lot of challenges in terms of maintenance and operation and survivability. But people have been putting out floating solar projects both in inland waters and actually in sea waters. Wave energy is still a big opportunity in terms of there being a very large energy resource that is undisputed. We have technology that can access it, and it's about how they move forward on that route to market. In similar vein, tidal energy, also a very attractive resource. It's entirely predictable, reliable, and both wave and tidal could be very good complements to solar and wind energy, in that they arrive at different times. Further afield, in places more like around the equator, ocean thermal energy conversion is another technology that exploits the difference in heat between deeper water and shallower water. Osmotic energy is another technology that's been looked at that relates to freshwater discharge from rivers and seawater, and the energy that can be obtained through mixing both of those. And then obviously, I've put it right down here in the list, but oil and gas is a massive sector at the moment, and it is still something we are all consuming every day in everything that we do, and we have to work out how to make that sector decarbonize on the journey to net zero. And that may be related to hydrogen, and it may be related to carbon capture and storage. So lots of opportunities in energy. And unfortunately in this talk, I can only just kind of signpost without going into great detail. In terms of shipping, again, we need to decarbonize that. There could be options in terms of hydrogen and ammonia and electrification, and many people are looking at this in different geographies and different places. We've got some interesting pilot projects happening at the moment. Ocean technology is a very exciting area. We've seen the impact of drones, and the same applies offshore unmanned vessels, offshore operations, whether it be wind farm inspections or oil platform inspections or maintenance or ocean cleanup. These are all areas where robotics could play a very large part, underwater technology. And those robotics need power, they need servicing, they need development, sensing, environmental monitoring, condition monitoring. We can get much better information about our infrastructure, our assets, our oceans, from new and emerging sensing technologies, whether that be satellite or in water technologies, and linked to that, the communications, the subsea to the surface and surface to shore, technologies like Elon Musk's Starlink are potentially revolutionary, and others are also working in that game, which allow you to provide internet high-speed comms to quite remote areas, which wasn't possible before in the past. So lots of exciting stuff going on. In terms of aquaculture, there's a need to improve environmental credentials, potentially a trend to larger farms in more energetic waters where the waters are more turbulently mixed. Interesting opportunities there around how you anchor and build these structures in these more energetic waters, how you service them, maintain them, provide the energy. If you look at infrastructure, we're going to need investment in ports and harbours to build and service offshore renewables. The Scottish wind round, the UK rounds, there's lots of opportunities there, and it's kind of a question of where does it happen, where does it happen first, and where is it? How can we streamline this to reduce costs for everyone? Transport hubs for zero carbon fueling. If we do move to hydrogen, if we do move to electrification, how are those hubs picked up on? I spoke to one company that is active in this area of hydrogen, and they are looking at building a solar project in Namibia to produce hydrogen for their ships as they transport from Australia to Europe and to South America. So lots of exciting things going on. Tourism, ecotourism, underwater tourism, overwater tourism, sustainable tourism. Can we make it more local with the trend and the challenges in transport at the moment? There's a lot to be said for tourism on your doorstep or local tourism. And so lots of opportunities around there. Shipbuilding, obviously we've got opportunities linked to what I was saying about the transport side of it, and how can we build that out also in the military side, defense, surveillance, and a need to zero carbon that, which is also a strategic benefit from a military point of view, because then you don't have to rely on other countries for those fossil fuels potentially. And then fishing, increasing focus on traceability, local supply and sustainability. So that's just a very rapid run through on these different sectors. Hope that gives you a little bit of a flavor. In terms of the sort of current employment, we did this report for Scottish Enterprise back in 2019, which you can find on the Blue Economy Cluster Builder website, and these are some of the figures from that. And we compared Scotland, the UK, EU to global sort of numbers here. So that gives you a little picture of how people are employed at the moment in Scotland and globally in these different sectors. And then similarly, the gross value added from each of these different sectors. And you can see in Scotland, oil and gas is obviously very much a dominant sector in that. But clearly, as things go forward, that sector is likely to decline over time as we decarbonize and as these oil and gas resources are depleted. And this picture here, oh, sorry, I've got a thing on my screen. I'll just get rid of that. Oops. Don't know how that's arrived there. Anyway, so this is a picture here of a global GVA economy per head with, I think, a kind of thing from a Mac on it, which apologies for that. But this gives you a picture here of that for different sectors, the GVA per head for different sectors. And again, you can see what a large sector oil and gas is in terms of that GVA per head figure. But clearly, it's quite a diverse range here across different sectors and in different countries. So in terms of the forecast growth here that we're expecting to see, we expect big increases in marine renewables, but growth across all of these different sectors. And of course, it's a mug's game trying to predict the future, and things can change. But this was the best snapshot that we could do at this stage based on various industry reports and estimates of that market. But even in markets with relatively low growth, there may be big opportunities for change and for diversification. So if we're looking at investment, some basic questions, and this is perhaps now turning it around to you as a participant on this call. If you're looking for investment, would you invest in your business or product that you're looking for? Why? Just some very basic questions. Are you invested? Have you put your own money into that company and product? What is the team that makes up that investment? What's the concept? What is the market? I mean, these are very basic questions, but they all have to be answered and be answered quite succinctly. Who are your customers and why will you be successful? So that gives you a little bit of a picture of what might be required if we're looking at the investment landscape. And what do classically investors ideally want? Well, they ideally want a defined market for the product. This is the market. If no one else is operating in that market, then often people are a little bit nervous and they say, well, is there really a market there? Doesn't mean there isn't a market, but it just means it's a little bit harder to get people over the line. Ideally, people, particularly sort of in the VC world, want the potential for you to become the dominant force in that market, whatever that means. But people want to back, you know, the kind of the stars in a particular area. If it's technology related, obviously strong intellectual protection is very important, that you can defend that either with patents or other means. They want to see a good management team, and ideally a return on investment in a relatively short time scale. Again, not applicable for all investors all of the time, but in an ideal world, you'd like to get your money in and get it out in a relatively short time scale. And to state the obvious, they'd like high returns, jam on cake, low risk, but linked to that, of course, a robust business plan that is defendable. So the types of investors that are out there are obviously everything from friends and family, which can be good and bad. It could be bad to rely on family and friends if you think it's quite a risky prospect, but then perhaps you shouldn't be pushing it forward anyway. I don't know. Angel networks. There are a number of different angel networks that with more sophisticated investors able to assess risks and make their own judgments, and they can be quite useful in giving support. They're quite often individuals who've made money or have experience in business, and they're happy to offer advice and from their own experience. High net worth individuals, and here I'm thinking of particularly wealthy individuals. They can be good and bad. They can provide large amounts of funding, but they can also be, what's the word? A little bit egotistical perhaps, or kind of want the thing in their own light. And so you have to temper that a little bit in terms of what that person wants and what they're like. So just because somebody is very wealthy and wants to invest doesn't always mean that their objectives are aligned with yours as a company. Crowdfunders has increasingly become quite interesting as a means of funding different projects and technologies, venture capital and corporate investment. And there can be different routes to markets as well. And I've just given an energy example here of different entities that might invest in things from utilities to power producers, project developers, financiers, suppliers, and public sector and communities. So lots of avenues for investors. Types of finance, the kind of three main areas in kind of ranked in terms of attractiveness. Grant is nice because it's free money and not usually paid back, but it can be time consuming researching which grants are available and when. And it can be a lot of work and time consuming to make an application. There may be a limited probability of success, which might mean we waste your time even with a good proposal. And it may alter the focus of the company to meet with the grant conditions or grant calls. So you need to be careful you're not chasing your tail just to meet a grant objective. And the timescales may not be ideal. But it does give you the discipline of defining a project plan with milestones and benefits from collaborative working and that kind of process of having a shared goal through the project. A loan or bond is great if you can get it, particularly if it's at a low rate of interest. So it's cheaper than equity, but it needs to be repaid. So the downside is usually security is required and therefore may not be available or desirable for early stage high risk companies. The other benefit is the finance provider will require risks to be mitigated in order to provide that loan or bond. And then finally, equity. Usually there's no explicit repayment timescale. It's expensive in terms of ownership, and there may be a distraction of having investors depending on how many you have and what you have to do to keep them happy. But on the other hand, there may be benefits from mentoring from those investors. So if you look at the business plan, has a number of different elements, depending on what the technology is. This is very kind of generic here, but if you're looking at a company, if it's technology based, what are the unique selling points? What's the technology strategy to develop that technology? What's the commercialization strategy, which is not necessarily the same thing? What's the company development strategy? If you're having to develop this, how do you get it into different markets? How do you service it? How do you build it out? What's the logistics associated with that? And what are the financial projections? And all of these have to tie together, albeit they can be iterative and continue to develop over time. And if you look at that route to market and financial considerations, what are the risk and value inflection points? You know, if you're targeting investment, do you want all the investment to get you from here to there, or it in chunks? If you actually have too high an investment and too early, it can be problematic in that you're sitting on a large pile of cash and perhaps a lot more diluted than might otherwise be the case. But equally problematic can be too little investment and too late. And this kind of gives you an example of the sort of process there. But I think what's crucial is always to be customer orientated. What are the customer needs? How do you get those fast customers? How do you get the sales? And that will drive many things. So finally, just to wrap up, I just wanted to say the world could be very different in the future. And so, you know, who would have thought back in the 80s when Douglas Adams wrote the Hitchhiker's Guide to the Galaxy that we would actually have that in our pocket these days, something that tells you all about the universe, but sometimes gets it wrong. And indeed, this is an example here. This is an underwater data center and by Microsoft. And, you know, maybe we will have all kinds of interesting things in the future. So that's me. I hope that's interesting and happy to answer any questions. Do feel free to post them in the chat. Thanks very much.
Thank you very much, Max, and thank you for introducing this broad perspective about blue economy and explaining and telling a bit about how is the forecast for different sectors in blue economy to grow. This is super important for us to have a better understanding about where the money should live and where the money should be more invested in the future. It is very interesting to see how small is the growth rate for oil and gas and how big is the growth rate for marine renewables, which we can see that there is a clear movement there in terms of, you know, for the future of the economy. And I think the key message here is that we clearly have a new economy that is being designed by some very important issue that by climate change. So we really need to address climate change through some very a big push from technology and new policies, and also we need a great movement from the investment from the financial sector as well. And I saw that you showed very interesting tools, investment tools for new technologies and green technologies. But one question that often came up from our Blue Economy Cluster Builder members when we did the first one-to-one engagement sessions was that some companies that want to innovate and create very innovative solutions to decarbonize the economy, they often said that they have the technology, they have the innovation, they have everything that they need to decarbonize the economy, but they feel this very gap. They feel that they have this feeling that there is no financial mechanisms to support them to put their innovation into the market. And then my question for you, Max, as you have like this very great knowledge about the the growth of blue economy and decarbonizing the economy in the energy sector, what would be your key advice for the financial sector to support the innovation to decarbonize the economy, to support SMEs that want to innovate and want to put their products into the market? What would you tell them, to investors or to banks or to the financial sector?
Well, I mean, there's a lot of money out there looking at potential investments. So it's not that there's a lack of investment potential. I think it comes back to what I was saying in the presentation there, albeit very rapidly, and not much detail, but it's having that business plan and that route to market, the route to commercialization of how you achieve your first sales. Who are your customers and how do you get those sales? Now, there may be steps on the way, but I think the more you can engage with customers and know what it is they are after, the more likely you are to get people to back what you're trying to do. So a technology in itself is nice, it's interesting, it may be a great technology, but if you haven't defined that route to market, then it's going to flounder. So I think that's where it's worth taking on advice. Not wishing to blow my own trumpet, but if people want to help on that, there are companies such as my own which can help on that route of trying to define that route to commercialization. And some of it, I agree, is a challenge because you can kind of see that there's a need there, and it's also related to the sort of politics. Are there specific market enablement mechanisms in place if you're trying to bring forward new technologies in a commodity market that may have benefits? So it's a little bit of how do you influence that process? And we have trade associations, we have different bodies that can help lobby that. It can be a long process, and maybe there are opportunities in different geographies at different times to pursue things in a little bit differently. And maybe there are kind of steps you can do on the way that are some around projects and funding, which that can help you make those steps towards that. So I don't know if that helps, Julia, but that's my take on it.
Thank you very much. So we can go now for the next speaker. Is it Richard?
Yeah, thank you very much.
Thank you.
Okay, yeah, if you can just move on to the slides. So thanks everyone for your time. I'm Richard Knox. I'm the Managing Director and founder of Verloom. So what I'm going to do is touch on some of the areas that Max talked about and give our own personal experience as a technology developer in terms of how our technology moves forward and how we then funded that as a business, not just the actual product development itself. So you just go into the next slide. So we established Verloom with intent that we were looking for different ways of finding commercial routes to market for clean marine renewable technology, and with intent that we could decarbonise existing operations. So we founded the company in 2013, and at the time, a lot of companies were looking for the route to market to go from, in the marine space, really megawatt-hour systems that could be plugged into the grid. And as again Max touched on, it was quite difficult to get a clear commercialization path and get the economics to work for a number of those businesses. So we wanted to take a different approach, hoping that we can maybe be successful by taking it in smaller steps. So we looked at different ways in which we could provide clean and marine renewable technology, but for other applications, because people need effectively electrical power for numerous things offshore and in the blue economy. So if you just move to the next slide. So this kind of gives a kind of brief kind of bullet points in terms of where the business was. So in 2013, we looked at various ways of producing marine renewable technology and realized if you want to do that with any application at the time other than the grid, that you're going to have to be able to provide power on demand. And therefore, to do that, you need to couple it with an energy storage system. So if you're going to couple it with an energy storage system, the energy storage is effectively going to try and fill the gaps in terms of when the renewable technology is intermittent or when it doesn't actually produce power. And so we looked at all the different ones, wave, tidal. There's numerous ways of producing marine energy, but But the one that was most predictable was tidal energy. So we commenced a project, and I'll go through in a bit more detail as to how we funded it in a few slides, but we secured the funding to produce a first prototype system, which was effectively it was like electric hybrid drive system for a car, but using a tidal turbine. And so we secured the funding for that and installed it, and had assumed a lot of the challenges would be around the tidal turbine and the robustness of it. But what actually came into effect was the fact that because we were looking to use this on different applications, target markets or where there was other existing infrastructure that we could potentially power was all in much lower speed tidal areas. So we didn't have any challenges really around the turbine. What we did have a really big challenge was with being able to efficiently store that energy and manage it. So when we first deployed our system and we had it in a trial up in Orkney for over 8 months, we realised that almost 50% of the energy was being lost, and that just wasn't good enough. So we had effectively just taken what we thought was what was EV car technology and packaged it into a system that we could put in the marine environment, but it was really developed for a completely different use case. So at that point, what we did realise though was that a lot of other companies were then, by that point in 2017, looking at how they could use marine technology for different applications, and they would come across exactly the same problem as we did. And so once we'd also looked at the installation of the system, we were able to engage with a number of potential clients, and what we realised that people wanted clean technology and wanted reliability, and they weren't particularly focused on how that power was being generated. So we took the decision as a business to pivot and focus solely on the energy storage and management system, and sort of almost to an extent just park the tidal turbine, so that we could be the de facto supplier of energy management storage system in the blue economy. And so we embarked on that process and really pivoted the business, and that was a key thing for us in terms of that's not what we had sold our investors, but that's what the customers wanted. And we had effectively started the development of a technology that could deliver that. So we moved from there, and we then secured additional funding, which allowed us to build a first scale prototype, which was a 100 kilowatt hour unit that we installed, or was going to be installed in Orkney, but it was right in the middle of lockdown. So we actually finished the prototype and did a wet trial with it in a wet pit test in the end of 2020. And the intention was that by building a prototype, that would create the confidence in our customers to supply us with a purchase order for a commercial system. Unfortunately, we managed to secure that order before we'd even finished building the prototype. So that system was then built and tested and shipped in December last year, and that was our Halo technology. So we just move to the next slide. So what started out as a tidal turbine system morphed into an energy management and storage system, which we then called Halo. So again, it was around following the customer needs and how we could find a niche and basically differentiate ourselves from the rest of the marketplace, because we found that, especially around the power generation side, there was a lot of companies looking at that, but there was nobody really filling this gap in terms of how you stored and delivered that power. So Halo basically encompasses an energy management system and a lithium-ion battery pack that can sit in anything from 3,000 meters to shallow water. So the picture on the top right is a management system, so the controller, and then the two pipes that you see in the background, each of those are a 50 kilowatt hour pack, and you use that photograph with the desk beside it to give you an idea of the scale. And then if you move to the next slide. What effectively our capability does is it encompasses a number of pillars. So our system can convert power, we can distribute it, it stores it in a battery pack, it manages that power, and then we do the mechanical packaging the system, so you can put it in the offshore environment, and then we integrate that as a full system to deliver that to clients. And so we can use that in underwater, which is the primary use case that we have, because our background and expertise was in subsea engineering, but you can also use it in offshore and other sort of onshore harsh environments. And then if you move to the next slide. So as I mentioned, when we were first looking at how we developed the technology and what customers might need, we found a number of different use cases and sort of expand across the left, because one of the big challenges in terms of getting investment is, what's the business case, and what value does it bring to our clients. So we looked at focusing on and decarbonising things that were already done effectively by either a diesel generator or a gas turbine offshore to produce electricity. So we wanted to provide electrical power with a clean, renewable system. And so we started on the left-hand side, where you've got umbilical remediation. So this has been a fault in an existing system for an oil and gas application. You then have brownfield expansion. You then have long offsets where the length of providing that power delivered by fossil fuels is really expensive, so we could do it cleanly, bearing in mind that not all fossil fuels are just burned and used to create direct emissions. They're using a number of different products. And then it starts to move to the right-hand side, where it's very much similar to the subsea infrastructure that's already in existence, but it's carbon capture and storage. So the aquifers that are used for CO2 sequestration are often quite far away from existing oil and gas infrastructure. So delivering all the power and communication utilities to hold that CO2 in place can be very expensive, so to find a more economic way of doing that. And as you move to the right, these are things which are really starting to cross over into all marine applications. So you've got marine residency, where we can provide the power and communications for a docking station for an AUV, which is actually what the very first system that we delivered was for. And also met ocean and leak detection. So the ones on the right, things like looking after met ocean conditions and monitoring them, are things that are used in offshore wind farms, or used in oil and gas, used in marine and defence. So there's a whole host of applications. And so for each of those, we've been able to kind of demonstrate a value to our customers by using clean energy that's not just reducing CO2, but then also reducing cost at the same time, which helps create that strong economic proposition. We move to the next slide. And then the next one, that's a slide. Yeah, so in terms of how we secured the investment for our business, so as I mentioned, we started in 2013, so we've been through quite a few different economic cycles, to say the least. And when we started out, we thought we'd follow quite a traditional path that a lot of technology companies that had worked in the oil and gas sector used, which was really to generate some profit from engineering services, but then use that to get to a stage where we developed the technology, we invested ourselves, and then basically sold the concept to an operator. And with it, and by selling it to an operator, we had they would effectively fund it all. But in that economic period, that just wasn't the case. There wasn't an investment in technology. And when I say we used our own money, Scottish Enterprise were fundamental in terms of providing grants and support to augment the funds that we did manage to generate ourselves to allow us to kind of fully fund the technology development. But with the economic climate, various market crashes, it was a very kind of risky approach to take. But that was our plan A. So if you move to the next slide, we decided to take a plan B. And that was really driven by the oil price crash in 2014, which meant that our revenue from our kind of traditional services was completely dried up and stopped. And so we looked at how other people invested in technology in all different segments, and really one of the kind of fundamental things was that they can rely on a customer funding their business. Maybe some customers help fund some technology development, but they certainly wouldn't fund a full business. And so we wanted to kind of look at the more traditional way of doing that, and some key things around that was the perception of the business area that you're operating in. So we were very cognizant about the fact that we'd come from an oil and gas background, but we were looking really to take that knowledge and move it into the blue economy and for renewable energy generation. So we had to look at how we could actually take that technology and use it in a broader space, and what the total addressable market would be for an investor, which then helped provide a better understanding what the value could be in the return on investment for them. And so we looked at very much in terms of how we could accelerate using our technology directly in the renewable space, not necessarily just in oil and gas. And we shared that vision with a number of investors and engaged with them, and just really to try and highlight the opportunity and get some initial feedback as to what might attract investors to make an investment in Verloon. And if you just go to the next slide. So what we did is, when we looked at our financial model, we tried to kind of split the pie up to a certain extent. So again, Max touched on some of these, and this is kind of really how we completed our first funding round. And although the pie's on thirds, they're kind of roughly, that's how we actually divvied up the investment. So we started with grants. We'd already been working with Scottish Enterprise on a number of the early stage feasibility studies, and then we were really lucky to secure an R&D grant, a large scale R&D grant from Scottish Enterprise. But there are a number of other funding bodies, but that's often a good place to start in terms of seeing what non-dilutive investment that you can get in your technology. So we start with grants. Also, there's the HMRC R&D tax scheme. So if you are investing heavily in your technology, there are R&D tax credits that can be claimed back. And there's a number of accountancy firms and things that specialise in that area that can help you do that. And then the sort of third one was around equity. So there's various options around the sort of founded employees, friends and family, crowdfunding, angel investors, very much as Max had outlined. And we sort of worked our way through that process where we started with the founding employees and friends and family and some angel investors, and then moved on to private equity to fill the investment requirement that you had. If you just move on to the next slide. Yeah, so this slide here gives you a bit of an understanding of the scale notes in dollars, but it's quite easy to convert. So what we found is if you're looking at sort of an investment requirement around the hundreds of thousands mark, that's very much in the kind of sphere of friends and family and seed round. And so when Max made reference to high net worth individuals, they can vary quite significantly, but you will find a large batch of them in the sort of hundreds of thousands of pounds mark, and that really helps you get the ball rolling. So that's the sort of sums of money that can get you to do some real kind of research if you then leverage that with grants, with grant funding and tax credits to de-risk the technology from the first couple of stages in terms of fundamental principles of what you're trying to develop. In most cases, if it's associated with hardware and something that might be used in the marine environment. And then you really need to look at if you're looking at kind of growing that technology or doing some sort of field trials, you're then in the sort of millions of pounds from our experience. And that's when you're sort of looking at your kind of Series A, and that can then be in the sort of you're kind of beyond the angel investors, and you're at the kind of early stages of private equity. And there's a large private equity community in Scotland, and that is quite important because investors tend to like to invest in teams that they know and have access to, and are often quite local. So we were fortunate to have investment from Par Equity, but there's a number of other syndicates as well in that area. So we've had a great experience in terms of having our investment from Par Equity, and these guys tend to work in a space between sort of £1 million to maybe £5 million. And then then you're really looking at how you grow your business in terms of going to an IPO, or there's Series A, but they could B, C, etc. As you're growing your business at various steps of increasing the valuation. And so that's one route, but there could be many different exit routes. It's very much, you need to really understand, especially when you're going into Series A, how you can potentially exit your business for the investors so they can get a return on their investment. So it's very important to be clear about how you intend to grow your business and what the opportunities are for a specific investor. Just go to the next slide. So one of the key things to look out for is what is it that a potential investor looks for. And you can watch Dragon's Den and you can see people being grilled. I generally don't particularly like watching that program because it's too much like real life. So there's all the kind of theatrical component to the television program, but actually, if you listen to what they're asking people that are looking for investment, and they always kind of focus on finance, it's really key to have all the questions answered. And you might not be in TV, but when you are looking at secure investment, these are exactly the sort of things that people will be asking for. And it's at the equity stage, they're really looking for a high return because there's a really high percentage of companies won't be able to be successful. So they're really looking for, if you are successful, to create a large enough return that covers all the losses in all these other companies. They really want skin in the game. If you don't believe in your own business, then why should they? So they really want to understand what commitments and sacrifices you've made to build that business financially and time and all the other things that you've done to found a business. They're really looking for a unique selling point. So they really want to know where you're positioned and why you'll be successful. And a lot of that will be, if you're a technology company, around your IP and how you can protect that. But the USP can be many things, not just the IP. Your route to market and your speed to market and where you could potentially sit in the market are really important. The credibility of the team, because it's two things, it's two elements really. It's the technology and also the team that can deliver that. So having a really strong team that when they invest the money in there, that it's going to be in safe hands and execute as you say it's going to be, or if it's not, that you've got the competence to make sure that you're making best use of the funds invested, and then a really strong commercialization strategy. There's nothing better than showing purchase orders from customers or exactly how you're going to receive them, and then that's the driving factor between equity. But people from other sectors, such as grants, may have different drivers, and it's important to understand that. So things like IP and innovation are also important to them, but employment comes really into the play, especially with a lot of grant funding bodies that are funded by the government, because they look at their return on investment is measured in completely different metrics, or not completely different metrics, but a number of additional metrics, such as the number of employees invested, where you might be investing in your supply chain, and what growth there is for exports, and other things around what might be beneficial to the governing body that's actually investing in it. And then HMRC is effectively one of the kind of simplest ones, where it's very prescriptive, and you need to meet the requirements of the legislation around tax credits. If you just move to the next slide. I think there's something that's really important to be conscious of. So there's the blue economy and renewable energy in general there's a massive opportunity. But when investors are looking at investing in your business, they could be looking at businesses from every sector. So, kind of where we sit is quite a small bubble. And so if you're going to secure investment, you really need to differentiate yourself within that small bubble and be excellent to secure the funds that you need, because you can be competing with people who are potentially developing an app who've got really low rate of capital expenditure, and the investment profile that they need might be much lower, or the return on investment much quicker than you are. So you have to be cognizant of the fact that you're not just necessarily competing with people that are in your same sector or technology space. And then the next slide. And so this is just some of the kind of challenges that we came across. Don't want to make it sound like it was easy, because it isn't. But cash flow is always something you've got to be very careful of as an SME. Never mind an SME that's developing new technology. Timelines. It takes a long time to secure investment, to get the right investor. 12 months minimum really is, especially if you've never secured any investment already, is the sort of timescales you should be thinking of. So don't wait until you need it. You need to be planning these things out well in advance. Market stigmatization, and that's been much more prevalent around now. A lot of companies are trying to transition from oil and gas into other areas. But some funds will only specifically invest in companies that are only operating, say, clean technology, or there's some investors won't invest in defence. So you need to be cognizant of that and make sure that the investors that you're approaching align to how you anticipate growing your business. There's lots of ways. There's identifying the appropriate fund, as I mentioned. Understand how unique you are, and again, it's just referring to that credible team. So really trying to understand, have a really honest conversation about your own business and where your strengths and weaknesses are, because if you don't, other people will soon pick them out, and it's important that you understand where they are. And often, in our instance, we had weaknesses within our business, but the investment that we received were going to allow us to address that, so we were quite open about it, and how additional investment could help us grow the business and increase the value. And then the next slide. So one thing that is really on your favour, especially if you're working in the blue economy at the minute, it's extremely popular sector at the moment to invest in. So it's really key then to get some good advisors that will help you find investors that align to your business ambitions. There's lots of advice out there, everything from the internet to securing an investor advisor. We worked with Simmons Piper Jaffray that helped us get some marquee investments. There are others, but that's the ones that we worked with. With good experience getting investment with them. And then one thing that's often comes up, especially with technology companies in terms of the way they've been established, is the fact that be wary of having a complex or corporate structure in terms of where the IP sits. Some companies will have IP sitting in different companies to where they're operating. They might have holding structures, etc. You really need to make sure that that's in a good position, so it's quite clear to understand what the investor is actually investing in. We had a structure where we had IP sitting in a different company, but they were investing in the top level holding business that meant they owned everything. So there was no kind of debate around any kind of clever corporate structure. So it's really important that that's all set up before you start engaging with investors. And once you're out there, you know, looking for investment, the single sole thing that will really help you secure investment is actually purchase orders from customers and customer engagement. So the more you can do in that area, you know, the better, because it gets sales and revenue, but then it helps secure investment. And then just the next slide. Yeah, so just to kind of summarize, so from our own position, I gave you some background in our own story, and we've secured investment in total of £12 million to date since we set up the business, and that's obviously meant there's been dilution for the original founders and the original owners of the business, like myself, but we took the view of that we really kind of wanted to gain investment and create a successful business, and we made a bigger business, then everyone benefits, including ourselves, in terms of the overall value of what you've built is higher. So, you know, it's often important not just to think about percentages, but how you can actually grow the business and what that return could be. So thanks very much for everyone's time, and I hope there's maybe been something of interest there for you. And if you've got any questions, happy, if you go to the next slide, happy to answer any more questions. Thank you.
Yeah, thank you very much, Richard. It was very interesting to listen this perspective from a business that maybe we can tell that is a case of success in terms of achieving some very good business results in the blue economy. I do have a couple of questions, because I found it very, very interesting when you said that you had a plan A and a plan B. So it means that we don't need business. We have to think about different scenarios that can be pushed by external issues like crisis or climate change or a war in Ukraine. So all these things also have a great influence in how business performance, and they might push business into an innovation pathway. As you said, that your business had a very different pathway when we had the crisis of the price of oil and gas. So, you know, it's very important to be aware that business are under a bigger thing that have great influence in the results. And the other thing that I found very interesting was when you said that private investments, they also look for IP. So we have in our previous event, we have a discussion about the importance of IP for SMEs when they want to grow. And then, so when we want to access private investment, it's because business need private investment to accelerate their growth. This is why I want to listen to Martin before I put some question here, because so IP is very important for business when they want to prove their technologies and access money to accelerate their growth. So so Martin, go for it, and let's listen your perspective about investment for business to grow.
Thanks, Julia. Move on to the next slide, please. So good morning, everybody. My name is Martin Braken. I am a specialist in the financial readiness team at Scottish Enterprise. Next slide, please. So just to give a bit of background for those who don't know, Scottish Enterprise is Scotland's primary economic development agency. It's a non-departmental public body funded by the Scottish Government. Geographically, Scottish Enterprise covers the majority of Scotland in terms of population and volume of businesses, with Highlands and Islands Enterprise covering the Highlands and Islands region, and South of Scotland Enterprise covering Dumfries and Galloway and the borders. Scottish Enterprise's basic aim is to drive economic benefit for Scotland, which essentially means creating good quality permanent jobs in Scotland. However, supporting Scotland's transition to net zero is very much at the forefront of our agenda as well. Next slide, please. So what does the financial readiness team at Scottish Enterprise actually do? So financial readiness is an advisory service. We don't provide any direct funding. We provide guidance to businesses that are looking to raise funding, and specifically or primarily equity investment and or debt funding. We don't really get involved directly in advising on or delivery of grant funding. Financial readiness sits within the wider growth investments team at Scottish Enterprise. Growth investments being the investment arm of Scottish Enterprise. Now, people that are familiar with Scottish Enterprise may know growth investments better under its previous name, which was the Scottish Investment Bank, or SIB. The Scottish Investment Bank branding was withdrawn in early 2021 following the launch of the Scottish National Investment Bank, or SNIB. Obviously two names that sounded very similar. Scottish National Investment Bank is a Scottish government owned and funded bank which operates independently from the government and Scottish Enterprise, so two completely separate organisations. Financial readiness, although we are part of Scottish Enterprise, we support businesses on a pan-Scotland basis, so we'll also support businesses that are located within the Highlands and Islands Enterprise or the South of Scotland Enterprise regions. Next slide, please. So what type of support can financial readiness provide? So we deal with businesses at all stages and all shapes and sizes, from startups to early stage to established businesses that have already raised funding and are looking at further funding rounds. So we'll give whatever degree of support businesses need. But the first stage of the journey is generally to help businesses understand what their funding requirement actually looks like, which isn't always as obvious as it seems. Once they've quantified that, what we'll do is we'll talk them through the funding options, and the main options being there's sort of three categories of funding that you can look at, which some of the guys have already touched on. You've got grant funding, you've got equity investment, and you've got debt funding. So we'll talk them through the different options and what type of funding might be suitable for their business, and it could be a combination of one or two or three of those. And the third stage in the journey that we take businesses on is help them get what we call funder ready. And essentially that means giving them advice on having the right collateral in place to help them raise funding. And by collateral, what I'm talking about is a decent set of financial projections, financial model, a business plan, a pitch deck, an investment teaser, basically having the right information in place to present a business in the best possible light when you approach potential funders. And the final stage of the journey is we help businesses identify potential funders. So if it's equity investment that they're looking for, we obviously have close relationships with a number of Scottish investors in particular, but we also have access to a database that we can interrogate to find potential investors from across the UK and investors overseas who've previously invested in Scottish companies. If it's debt funding a business is looking for, we have contacts with all the main banks, but also with a number of secondary debt providers that are out there in the market. Next slide, please. Just to give a quick flavour of what the financial readiness team actually looks like. So it's a team of 8 people spread across Scotland, but predominantly located in the central belt. However, as I say, we deal with the whole of Scotland. Obviously, for the last couple of years during the pandemic, we've been working exclusively on Teams calls. But now that things are moving forwards, we're starting to get out and about again, and we're more than happy to go out and visit businesses or meet businesses with any of our offices across Scotland. Next slide, please. Just to give a flavour of our activity levels and the volumes of businesses that we help. So in the financial year ending 31st of March 22, we assisted just under 270 companies with guidance on raising funding. Now, that number is based on an internal measure whereby we have to spend a certain amount of time working with a business. In reality, in any given year, we probably touch closer to 1,000 businesses. If you take account of businesses that would maybe just have a quick phone call or a quick email exchange with. We don't have any specific eligibility requirements in terms of who will support with financial readiness advice. It's essentially any business that has a fundraising requirement. And within those 269 companies that we provided advice to, 92 companies raised just under £90 million of finance. Now, that's caveated because we only record in those stats the finance that we actually know about. Quite often businesses will raise funding, sometimes with our support, but they just don't bother to tell us that they've actually raised funding. So we interrogate various sources to identify funds raised. So that would be an absolute minimum figure in terms of businesses that we've supported. Next slide, please. So just moving on from the financial readiness, which I say is the advisory service that we offer, the wider growth investments team can also provide direct funding to businesses. The key thing to note is that our funding is what we call gap funding, and I'll
Right.
apologies, folks. My connection seemed to disappear there, and I believe that my video may well have disappeared, but hopefully you can still hear me.
Yeah.
Yep.
Thank you.
Yeah. Okay. Apologies. I'll try and recover my video oh, here we go. Yeah. Sorry. So yeah, I'll come back to what I mean by gap funding later on. Now, historically, our funding was focused on equity investment alongside private sector investors. But since the start of 2019, we've also had a debt funding capability through what's called the Scottish Loan Scheme. And again, I'll come back to that later on. Next slide, please. So in terms of our approach to funding in the growth investments team, as I said before, we provide what we call gap funding. So there needs to be an identified funding shortfall. In other words, a business has gone to the private sector, has attempted to secure all the funding it's looking for, but has come up short, and there's an identified gap. And if the business isn't able to raise the funding it's looking for, it might not be able to proceed with its plans or move on to the next stage of development. So we would look to fund the gap. Equity on the equity co-investment side, that is always alongside private sector investors. So the chronology is that a business goes to the private sector, secures funding from one or more private sector investors. There's an identified gap. We can potentially look at co-investing alongside the private sector investors. And as a general rule of thumb, we will only ever invest a maximum of 50% in any given funding round, in terms of us between ourselves and any other public sector sources of investment. The loan funding side of things is slightly different. Again, there has to be an identified gap. In other words, a business has come up short in securing private funding. However, in those instances, if they're completely unsuccessful in securing funding from, say, their main clearing bank, then we could potentially provide 100% of the loan funding requirement, subject to meeting all the other relevant criteria. In terms of the type of businesses that growth investments looks at, it's essentially SMEs with growth potential. So any business that's categorised as an SME. Other key parameters that we look at is a business needs to have a significant operational presence in Scotland, and there needs to be a clear view on a potential economic benefit to Scotland, which again essentially means job creation in Scotland. And any investments or loans that Scottish Enterprise make are always on fully commercial terms. On the equity investment side, what we would do is we would mirror the terms of the private sector investor that we're co-investing alongside. And on the loan side, we look at general market conditions and we'll look to offer a commercial rate. Next slide, please. In terms of the specific funds that we have available, so there's 2 equity funds and 1 loan fund. The equity funds being the Scottish Co-Investment Fund and the Scottish Venture Fund, and I'll provide more details on those in a moment, and the debt funding scheme being the Scottish Loan Scheme. Next slide, please. Just to go into a bit more detail on the funds. So the Scottish Co-Investment Fund and the Scottish Venture Fund are essentially, very similar in terms of the way they work. The maximum investment that we can provide is, generally speaking, £2 million. I think the minimum figure that we will invest is £20,000 or thereabouts. The key difference between those two funds is that with the co-investment fund, that is what is used when we are co-investing alongside what we call an accredited co-investment partner. So if you look on the website, you'll see a list of, I think at the moment, 19 accredited co-investment partners. And that's basically investors that we work very closely with. We've invested alongside on a number of occasions previously, and we're prepared to place a degree of reliance on their ability to assess a deal and form an investment decision. In those circumstances, if that co-investment partner isn't able to provide all the funding that's required, they will come to Growth Investments and we will co-invest alongside them. So a business is looking for £500,000. They're speaking to one of our accredited partners. They're prepared to invest £250,000. They will come to us directly and we will form a view on whether or not we're happy to co-invest alongside them. The Scottish Venture Fund works differently. In that instance, a company will have secured private sector funding from an investor that's not an accredited partner, in which case they will then come to the Growth Investments team directly with a set of terms from the private sector investor, and they will ask if you're prepared to look at co-investing alongside the private sector partner. The debt scheme, which is the Scottish Loan Scheme, there's just some detail there, but the broad parameters of that scheme is it will lend amounts of between £250,000 and £2 million. The key thing about the debt scheme is that it's only available to established businesses, and the criteria that we look at there is a business needs to have been trading for a minimum of 2 years, have a minimum of £250,000 of turnover, and either be profitable or forecasting to be profitable within a period of 12 months. And as I said before, with the debt scheme, we can do up to 100% funding. The key there being the debt scheme is a fully commercial loan. It's not soft lending. So we will look at the same criteria in terms of assessment as any other lender would do. The business needs to be viable with an ability to repay the loan. The main point of differentiation there is quite often a number of lenders, particularly the banks, will be looking for full security to make a loan. That's something that we can take a view on if necessary, and quite often that's where we can help, where mainstream lenders can't. Next slide, please. So that's a quick walk through the financial readiness service at Scottish Enterprise and also the funding capability offered by the wider Growth Investments team. I've got some contact details on screen if anybody wants to follow up with me, and I'm happy to take any questions now or obviously as part of the panel discussion. Thank you.
Thank you very much, Martin. Very interesting to see these different schemes of investment. And I think one of the questions that I have for you is related to the bubble graphic that Richard showed us in his presentation about the sectors. We see that the bubble for the energy sector is quite small compared to other bigger bubbles. I don't know about your experience, Martin, but do you have some experience to share in terms of evaluating investment for different sectors, and what would be the biggest challenges that the companies, SMEs from the energy and from blue economy sector see to access grants, money and investment?
I can't really talk to grant money, as I've already explained, Julia. Our support is focused primarily on companies that are looking for equity investment and or debt funding. At the moment, there is no specific sector focus or specialism within the Growth Investments team, and we're obviously not out there proactively looking for investment deals. We're reactive, so we will work with whatever businesses are looking for co-investment or whatever deals are brought to us by our co-investment partners. So we work off market requirements at any given point in time. I think in terms of the assessment parameters, I don't think there's any specific parameters that I'm aware of that we would apply to businesses that are operating in the blue economy. You know, the basic fundamentals are very much, as Max and Richard have already outlined in their talks, in terms of having a compelling business proposition with a good management team, market opportunities, route to market, visibility on potential customers, etc., etc. So there's nothing really specific in relation to the blue economy.
Okay. So, and if you could give an advice, for example, for business that are looking for private equity, based on your experience, what would be the key advice that you would give them when they want to access the private equity?
Well, the key thing, and I think Max actually touched on this in his presentation earlier on, you know, you can have the best business or the best business idea in the world, but if you don't have a good business proposition, as in a good business plan, you could quite easily not get investment or any other type of funding. You know, so a good business plan won't get a bad business funded, but a bad business plan can result in a good business failing to secure funding. So, you know, getting the right financial model, business plan, pitch deck, investment teaser, whatever other collateral you're using, getting good documentation in place is absolutely essential.
Yeah, and I think Richard also showed us a very interesting chart that illustrate the phases of the business development. We have like the very initial phase where business access grant from the funders, then when they grow, they start to access different types of grants. And I think this framework of phasing the business is very important for us to see, for business to see that they should follow some steps before access the different types of money that are available into the market, right? Is that the message, Richard, that you would give for colleagues or for business that want to develop their plan?
Yeah, absolutely. I mean, yeah, the way Richard described it is absolutely spot on. You get the funding from where you can get it when it's going to be available. So the initial place to go at the very, very early stage, securing any sort of form of private sector investment is going to be quite tricky. So businesses will usually access grant funding as far as possible at the early stages. Now, it's unlikely in most circumstances that you'll secure 100% funding through grants. There are some grants that will provide 100% funding, but generally you're going to need an element of other funding coming in alongside, which could be a bit of bootstrapping or friends and family, etc. But yes, grant funding first, and then as you move up the sort of the volume scale, it tends to be angel investors, angel investment syndicates, then you start moving up to the VCs and private equity houses, etc.
I was going to add to that as well. If unless you've developed the business and had an exit, and got a reputation and a credibility of doing that once before, and you try to do it again with a really strong team that's all got experience in doing that with a business, I think it's kind of pretty fair to say it's now impossible to go straight into large scale investment unless you kind of follow that path, and it's difficult enough as it is. So yeah, I think trying to skip too far ahead doesn't get you anywhere any quicker. It just takes you longer to get to the same point, and effectively may never get there. So it's just kind of taking your time to work through it, which might seem frustrating, but it's the tortoise kind of wins the race over the hare sometimes, so.
Yeah, I think it's a matter of controlling the anxiety, right? We want to see the business growing, but we have to be aware that there are phases that we need to respect the phases, the steps that we need to follow to access different types of money available in the market, really, right?
Yeah, because each step you move along, you're reducing the risk. Effectively to the point at which you reduce the risk to like a bank would invest in you, and we're not at that stage yet either, to be fair. But the closer and closer you get to there being less and less risk, and there's at that point as well, there's maybe less returns for the investor. But I think just taking the steps and try to get through the steps as quickly as you can, but don't try skipping them, I think.
And there's a balance here. Investment is is expensive in terms of dilution, and some companies I've spoken to sort of have investment as an objective.
Mm-hmm.
And it's sort of the horse before the cart kind of thing, because if you have a need that, and this will definitely help accelerate you, and you end up with a bigger cake than might otherwise be the case, as Martin was sort of illustrating, then great, yeah, go for it. But don't just go for investment for the sake of investment. You know, I mean, if you can grow a business without attracting investment, wow, fantastic. And that's the sort of, you know, one of these classic Dragon's Den thing. People kind of go on there and say, oh, we need investment to do this, but I've got this really successful business that's growing at X%. And they say, well, hang on, why do you need the investment? So, you know, there's a balance there, I suppose. And that's kind of, I think, what Martin was alluding to, you know, is going for the right amount at the right time that enables you to achieve those objectives, but not overcooking it.
Yeah. Is there any question from the
Sorry, Richard was saying, sorry, I was muddling, sorry.
No, that's fine.
Is there any question from the audience?
I've got another question actually, if that's just to Martin. Martin, I mean, it's always quite interesting to see what investments or who's active. So in your list of accredited investment partners, is there a list of who's done what deals in the last couple of years, or would that be something you can advise on if people come to you with sort of with kind of, you know, looking for routes for investment?
That's a really good question. I'm not aware of a sort of, you know, for example, a page on the website where you will see a list of all of our investee companies. We certainly tend to publicise quite heavily on a deal-by-deal basis. So if you follow any of myself or any of my colleagues on LinkedIn, you'll always see deals published. And more often than not, in a Scottish deal, you know, it's not unsurprising to see Scottish Enterprise mentioned as one of the group of investors. But I'm not aware of a source where you could actually say, so who are the current circa 300 investee companies of Scottish Enterprise? But I will look into that, Max, and I'll come back on that.
Yeah, no worries. Thanks.
Yeah. So thank you very much. I think one of the key remarks here that we can highlight from this panel, maybe we can say that there are money available in the market. And I think the lessons for business is that business need to be aware that there are phases of development for the business to access different types of money that are available in the market. And designing and having a very strong business plan is very important when business will talk to investors or to private equity or even to grant-funded projects. As Richard highlighted, that there are a couple of conditions that those different types of money need to find in the project or in the business in order to provide the money. So it's very important to have to follow some key issues or some key conditions in order to access those different types of money that are available. And having those conditions in mind and having a very strong business plan and a very strong pitch is key for business when we talk about investment and access to private equity to grow. And yeah, I think that's our panel for today. I want to thank you everyone for Richard, Max, and Martin for sharing some of your expertise and knowledge in the sector. I want to thank Net Zero Technology Center for hosting this event. And in terms of the Blue Economy Cluster Builder project, we still have other events coming up. The next one would be in July. The 13th of July is about exploring business abroad. So the next events are all dedicated to external markets. The next event is dedicated to Brazil. We will bring some speakers that operate in blue economy in Brazil to share some experiences that from Brazil and how we can bridge opportunities from Brazil with Scotland and build a network of organizations between those two countries to collaborate in blue economy. We will have another event dedicated to Spain and Portugal, Indonesia, and more other countries to come. So yeah, thank you very much all for joining us. Richard, Max, Martin, do you want to give a final word?
Just to say, yeah, if anyone's catching this not live, but later on through the webinar, then more than happy to answer any questions. You can reach me at m.carcas, C-A-R-C-A-S, @caelulum.com. That's CAELULUM.com. But no, it's been an interesting discussion. Very, very nice to see Richard's journey through this, and I'm sure he's got a few stories to tell on that, but it's very exciting to see that technology develop. So no, great. Thank you very much.
No,
thank you, Max. Richard, sorry.
Yeah, no, yeah, just thanks very much. And just when you picked up on the kind of plan A and plan B, I think that was, you know, plan B was already in place before the kind of market crash happened. And, you know, as a business, cash flow is king. So, you know, we were able to move to that plan B really quickly because it was already there. And we didn't quite necessarily have the same thing when we went into the lockdown and the pandemic, but we did have kind of planned out what the next kind of steps of our business were, and we basically had to jump on them really quickly as the whole kind of market changed. So yeah, looking at the risks in your business and what would you do, and sort of playing out some scenarios are really useful to have in your back pocket when things in the world change that you don't expect. So yeah, cool. But thanks very much. I hope you all found that interesting.
Thank you. Martin, do you want to give a final word?
Just to say that, as I said during the presentation, any business out there thinking of raising funding, please don't hesitate to contact Financial Readiness at Scottish Enterprise. We're happy to help in whatever way we can, and there are no daft questions. Thank you.
Thank you. Thank you very much. And yeah, have a good day, everyone. And the link to access the webinar will be available on YouTube, and we will share the link on our social media channels. Thank you. Bye.